Hello, everybody. Good afternoon, and thank you so much for joining us today. And it's also good morning to two of our guests, Tom, who's joining us from the Netherlands, and Justina, who just told me she's actually traveling. She is residing in the Netherlands, I think, Justina, but you're traveling right now in the UK. So great. Thank you very much for joining us. We are here today. We've gathered this forum to talk about conscious capital entering the Sri Lankan stock market. During this discussion, we may use the terms interchangeably. We may use the term conscious capital. I'm sure we will sometimes refer to it as impact-driven capital, impact investment. But for you to know that we are all referring to the same thing. If any of the panelists do want to qualify some of their statements about, there are subtle differences between these words, I would welcome you to do so. We are here today because Sarvodaya Development Finance is planning to go public after an initial share offering, and it's going to go public in the Colombo stock market. Sarvodaya Development Finance, as many of you here in Sri Lanka will know, is part of the Sarvodaya Shramadana movement, which is one of the largest, in fact, it is the largest non-governmental organization of its sort in Sri Lanka. Sarvodaya Development Finance is a registered finance company. It became or took the legal form of a registered finance company a decade ago, and now it's on the cusp of doing its IPO. We've got a great panel here today, and let me quickly introduce some of them. I think many for you in Sri Lanka will be familiar with many of them. First, I'll introduce you to Channa De Silva. Channa is the chairman of Sarvodaya Development Finance. Those in the capital markets may remember him because he was formerly the capital markets regulator in Sri Lanka. That was about 10 years ago, Channa, I think.
Correct, Shamindra.
Right. Yes. And joining Channa is Nilantha Jayaneti. Nilantha has a long association with Sarvodaya. Sure enough, he's the chief executive of Sarvodaya Development Finance. But Nilantha grew up in a rural area of Sri Lanka in the Ampara district. It's an area very far from Colombo. And in a conversation some time ago, he was talking about how he preschooled at a Sarvodaya sponsored preschool in rural Ampara. Nilantha's father is a rice farmer, and he's preschooled in the village preschool that was set up by the Sarvodaya movement. So, Nilantha, you've come a long way since that time. I think that must have been 40 years ago, but it's a long and interesting journey. Joining them is Tom Cummings. Now, Tom is founder of Leading Ventures. Tom has had roles in a number of prominent Dutch multinationals, all of which you may have heard of, including Shell, ABN AMRO, and of course also Unilever. In fact, he was telling me just yesterday how he was instrumental in laying the groundwork for sustainability just before Paul Polman took over as chairman of Unilever. If you know the background, under Polman, Unilever transformed in its approach to sustainable practices. So, Tom not only had a front row seat there, but he was instrumental in setting up the groundwork. So it's great to have you, Tom. Perfect for the forum that we are in. Next to Tom on your screen is Justina Alders-Sheya. Justina is a fund manager at Tridos Investment Management, a globally recognized leader in impact investment. In that role, she manages Tridos Microfinance Fund, the Tridos Fair Share Fund, and the SFRE Fund. Before joining Tridos, she served in several positions at Ernst & Young and at the ING Group. Next to Justina is Darshan. I think Darshan's been, is no stranger to all of you in the capital markets in Sri Lanka. Darshan is the Chief Executive Officer of NDB Investment Bank, one of the largest and most successful investment banks in Sri Lanka, one that took many companies public and hopefully will do so successfully for Sarvodaya Development Finance too. So let me also tell the audience out there that, please do feel free to start posting your questions on the forum. There's a Q&A there. You will be able to see your own questions and those that others are posting. And please do go ahead and do so. We will also have a short message from Dr. Vinya Aryaratna, the president of the Sarvodaya movement, later on. I spoke to him this morning. He's indisposed. Otherwise, he would have joined us. But we had an interesting chat this morning. And let me start off. Let's start off with the basics, some of the basics. And Channa, I'll turn to you for that, right? Sarvodaya Development Finance is going public. Tell us why you are going public right now. Why do you want to raise money?
Yes, Ramendra, thank you very much, and good afternoon to everyone out there viewing this show. So Sarvodaya, for a few reasons, are going public, and one of it is to raise capital because there's a co-capital requirement, and we are about $2 million short of that, and we want to raise that first. And at the same time, we thought, getting into public domain will really enhance the image of Sarvodaya, and also we can be the flag bearer of this, microfinance in Sri Lanka to international bodies also, whether it is impact funds or global credit lines that are on offer, and there are material advantages that Sarvodaya Development Finance will get by going public. And another factor is in Sri Lanka, if we go to the stock market, I think before the end of the year, there is a 50% tax advantage also offered by the government. So putting all these factors together, we decided to go into the stock market. Among them, I think if you want us to really highlight is the fact that we want to be international and in regards to transparency, governance and everything else. I think it elevates the organization when it is listed. And even last year, we won the Gold Award at the Chartered Institute of Accountancy for governance and transparency. So we've been driving on those lines, and we wanted to be fully fledged member of this sort of exercise, being fully listed, totally transparent, totally integrated with international and local investors was our desire.
Sure, I'll bring you in, Nilanta, if you can hear me clearly. You have a front seat of what's happening with your lending book, with your balance sheet, with credit demand, particularly in rural Sri Lanka, which none of us have a good idea about. Sitting here in Colombo, we are looking at the big banks, about credit expansion in big banks, and I suppose there is it doesn't work in the same dynamics. It doesn't work in the same way in rural Sri Lanka. Can you tell us about how you intend to deploy this money that you plan to raise? Do you plan to grow your book? What is the purpose of this besides what Chan already mentioned?
Yeah, as our chairman mentioned, of course, one thing is we want to become a listed company, and of course, whatever the money that we are going to raise through this IPO, of course, will be utilized for the growth of our lending book. So predominantly, our 80% of our total portfolio is outside Western Province. So it's a diversified portfolio that we have. So this is how we are going to use it for the benefit of the Sri Lankan rural entrepreneurs here in Sri Lanka.
So I'll just remind everybody who's online, and there's several hundred people online already, couple of hundred people, that I've shared with you an information memorandum on the screen relating to the IPO that's coming up. The prospectus also I will share with you. Can I come to you, Darshan, quickly? Darshan, can you tell us a bit about the upcoming IPO? Can you tell us when it opens, what's the quantum of money Sarvodaya is planning to raise, and the basic mechanics of it?
Yes, thanks, Shamindra. As Chanda said, the company intended to go public as a result of in order to meet the capital requirements. So we did a fundraise somewhere around towards end of the last financial year. That's also about 800 million being raised. So this time around, we are planning to raise about $1 billion. We have structured it in two tranches, 500 million initial issue going up to 1 billion as a green shoe option in case of oversubscription of the initial issue. So planning to place about 45 million shares through the entire issue at a price of ₹22. In fact, this is the same price at which we did the private placement way back in February this year. So it's the same price at ₹22. And the stake offered translates to about 30% of the company. And the good thing is actually we were able to get an underwriting arrangement for this IPO with Sampath Bank and NDB Bank coming in and underwriting 50% of the initial issue. So as underwriters. And so post IPO, the market capitalization would be about 3.3 billion. And then we are planning to open the IPO on the 23rd of November, and hopefully planning to list and trade the shares towards mid-December. So that's a basic highlights of the IPO, Shamindra.
Okay, Chana, let me come to you. Can you compare and contrast Sarvodaya Development Finance for us as it stands in the so-called NBFI landscape in Sri Lanka? That is the non-bank financial sector landscape. How does Sarvodaya Development Finance rank here, and how does it fit into this landscape?
Yes. NBFI landscape, Shamindra, mainly is for profit-driven organizations. They have one objective, that is to maximize profit, as most of us would understand. So I think it is good to note some tangibles, and that is, for example, they lend at 35%. That's the maximum allowed interest rate for, earlier it was more, Central Bank got it down to 35%, but in addition to 35%, they put other fees and other things also into it. So it becomes very unreasonable for the borrower in my mind. Whereas Sarvodaya Finance is lending at probably 40% less than that. That is also still high. I mean, even if we lend for 20%, it is high, but unfortunately, we also have to borrow from banks. So if you are taking numbers, if we borrow from banks at 10%, we tend to give at anything between 18 and 21% we lend. What we want to do in the future is when we get connected to these impact funds and funds of that nature, we want to raise credit lines from them for significant amounts of money at far competitive rates than that. And our objective one day is to give single-digit interest rates to our customers because, I think they deserve it. Their credit ratings are very good, although they are very poor. These are not willful defaulters. They come back and repay. NPLs in the agriculture sector is very, very attractive. They are, amazingly low. So we want to penetrate more and provide these individuals and entrepreneurs very, very competitive, very good interest rates to them. That's the first differential that I see. Secondly, is in our main objective is to empower village entrepreneurs, whereas that's our main desire. So in fact, shortly in about 2 months' time, we are starting a course for very underprivileged people who are a talent, who have a desire, who is hungry to succeed in business. We want to select 50 and take them through like a mini MBA program for about 6 months. You can call it a diploma program, intense residential program, and really groom them up, give them the capital, and allow them to start their own businesses. So these are things that we will envisage to do to uplift these rural entrepreneurs, people who are hidden in this country, and give them an opportunity to be noticed and give them a fighting chance with attractive financial schemes where even repayment can be structured in a way that will allow them to grow the business. Then thereafter, they can repay. So the entire mindset from the moment that we provide a loan is to really empower them and encourage them to stand up and run rather than getting the maximum out of them. So every stage of our business is structured that way, and I think we will continue to structure more and more post-IPO in this direction.
That's a fantastic overview, Chanda. So just to put things in context, you have already raised, Sarvodaya Development Finance has already raised 800 million rupees in a private placement earlier this year. Now it is in the market, or it is going to the market to raise up to 1 billion rupees. Nilantha, you will have this balance sheet in front of you, and you probably know your customers quite well, more so than most of us will. Can you tell us a bit about your customers? Who are you typically lending to? Is it true, or is it so that you lend to the bottom of the pyramid customers, as we call them? People who are somewhat financially disadvantaged.
Yeah. So when we look at Sarvodaya Development Finance business model, and one thing that we want to highlight over here is we have 51 branches. The geographical presence of these branches are very unique. So that is scattered among almost all the district and the main economic centers. And predominantly, our market share has been there for many years outside Western Province. So the amount of business what we get from outside Western Province is 80%. And there again, when we look at this business model and the customers that we have, and these 51 branches are connected to 5,400 societies across the island, which is which has been formed by Sarvodaya main movement for their entrepreneurship development, social activities, and the welfare activities, and so on and so forth. So those 51 5,400 societies are legally enacted societies under the society's ordinance and registered ROC. And these are the main places where they connect with the underprivileged people that you mentioned in village level, entrepreneurs who has desire to make some income generating activities in rural level. So these customers have been connected to nearest branch through these 5,400 societies, where we get the real good customers and the people who want to make some impact to the society and the economic growth of the country. So therefore they are into economic activities, and they are into development activities, and they are into SME, where we go and educate them on many aspects before we give them finance assistance. So we don't call it we do micro credit. It's microfinancing, where we inculcate the habit of savings, and we tell them how to maintain their cash flow proactively, and we tell them how to maintain their balance sheet and to have a right mix of asset and liabilities in order to take those business forward. And therefore, as a result, we have many or thousands of stories to boast about how they have succeeded, and they have some of these customers whom we have worked with are exporting their products to many part of the other part of the world, or the outside the Sri Lanka. So therefore, we have so much of customers, business, and entrepreneurs who have been developed by Sarvodaya and Sarvodaya Development Finance together. So basically, the business is coming from all part of the country, representing all economic activities.
Sure. Darshan, let me quickly bring you in here. NBFI sector perspective or non-bank financial sector perspective, and if you're looking at the numbers or if you're looking at the business model, how different is it? How different is Sarvodaya Development Finance to your typical finance company out there, do you think? Why is it different?
Yeah, so if I am to give a quick overview of the NBFI sector, so we have about 38 NBFIs operating in Sri Lanka. The asset base, if you look at over 35 billion, it's about 22 companies, and less than 35, it's about 16 in number. So the main product of this NBFI sector is leasing, obviously, and then of course followed by SME sector focused lending. So out of these, about 16 NBFIs are actively operating in the microfinance, SME, and MSME space. So if you look at Sarvodaya Finance, the key direct competitors in this sector, in the NBFI sector, competing with SDF, could be companies like Alders-Sheya Development Finance, HNB Finance, and Echelon Finance. So they can be considered as direct competitors who actually are operating in this space. So some of the key differentiators between SDF and other competitors, as Channa said, SDF continues to focus on uplifting and empowering the entrepreneurs, catering private to rural Sri Lanka. This probably may not be the case in the competition. In the case of SDF, as Nilanta said, mentioned about 78 to 80% of the loan portfolio is coming from outside the Western province. So that goes to show how to what extent SDF is present and catering to the rural economy of this country. And also, if you look at the SDF, so they actually offer a wide range of product offerings catering to the needs of the rural entrepreneurs. So from microfinance to SME, leasing, and security-backed loans. So all that is offered by SDF. Probably that's not been offered by other competition. And of course, changing the financial needs of the clients. SDF has been targeting the clientele and catering to the economic stature, as opposed to a broadening of the client demographics. So it's the same clients that has been groomed through the Sarvodaya movement, has been supported through the SDF operation. And sure. Then, so at the moment, SDF enjoys about 135,000 customer base, with women accounting for about 57% of that number. And also, one of the unique differentiators is the ability to utilize and leverage on the Sarvodaya brand. So Sarvodaya brand, a trusted, loyal brand, gratitude built over 6 decades, is right. A very strong brand. And then SDF has been able to leverage on that brand. And also the widespread reach of Sarvodaya, as Nilanta mentioned, about 5,400 societies. So through these societies, they have been able to reach to the rural entrepreneurs. They have about 51 touch points at this moment, with 30 branches and 21 service centers. Sure. There is no intention of the company to have more brick and mortar outlets, but to leverage on this Sarvodaya movement, which comprise about 5,400 societies. So those are some of the advantages and differentiators that SDF would have over their competition. I don't think anyone can probably boast of a competitive advantage like this.
Okay. Oh, thanks for that, Darshan. Tom and Justina, let me bring you in at this point, right? I mean, you have had experience deploying conscious capital or impact capital, as we also call it, in several countries. I just want to tap your thoughts, and I'll ask you to start, Tom. You know, how viable is conscious capital when it is chasing or when it is invested for opportunities at bottom of the pyramid for financial access. Is that a done thing? Is conscious capital available for that purpose? How viable? What's the experience of impact capital in that space?
Thank you very much, Shamindra. And I just want to give a special thanks to Sarvodaya and congratulate you on this this special moment. So just to recognize also Dr. Ariadne's work. I think one of the things that when I started getting involved in the conscious capital movement was important was that I realized in the downturn, in the crisis of banking in 2007, 2008, that people were not very aware of the wider range of banks that exist in the world that are beyond the large structural banks. And so I think the first thing to realize is that there is a set of banks that have existed, many of them for 40, 50 years. In one case in France, 140 years, Credit Cooperative. And so that there is a very wide ecology of banks that exist in this similar space. And what is interesting is that although there's been very little research that's been done up until the last few years on the impact of banks like yours, what is becoming more clear, and this is a recent study that was done by Dr. Serafim at Harvard, is that values-based banks and cooperative banks have a special role to play in an economy, and especially in the bottom of the pyramid, where they can touch the real economy, that is the material impact, as you've just all described, for entrepreneurs, communities, societies, and have constantly shown that by serving the real economy, they deliver better and more stable financial returns than those shown by the largest banks in the world. So this was a study done quite recently of 100 banks in the world, comparing largest banks with the banks that are like Sarvodaya Development Finance. And it was striking how these distinct business models share a common strategic foundation. They have a set of principles that really provides for the communities that they serve. Let me give an example. If we look at Brock Bank, I think is a good comparison of your bank. A large foundation that's been going for many, many years that really, in the words of The Economist, may be one of the best development models in the world, connected to a banking system that wants to take people from this bottom of the pyramid, essentially the how do you first create ways in which people can have gift capital for developing their small enterprise and get educated to do that, connected to then loan capital, which then connects them to the possibility when they put them together using technologies like Bcash to be able to monitor their cash flows and take them to real investments in buildings. And so you see that one of the characteristics of conscious capitalism is this growing up of people's lives and livelihoods, while at the same time, a great emphasis on how do we do this in a way that is not only socially important, but also affects how we work through the challenges of climate change and the issues that come with sustainability. So maybe I'll just leave it at that and come back a little later. But yeah.
Justina, may I also bring you in on that point? And Tom was referring to BRAC. I think, Tom, we should mention BRAC is from Bangladesh. We all know of Grameen, but not all of us are very familiar with BRAC. But you suggest that the BRAC model is something that's very similar to what SDF is currently pursuing. And I think BRAC has gone global. It's now in Africa, for sure. Justina, may I bring you in? And before you dive into this topic, would you mind taking a minute to sort of introduce the organization you manage funds for? And I know Tom is also part and associated with this organization. But may I ask you to briefly introduce Tridos Investment Management and the type of funds that you manage?
Yeah, that's good. Thank you very much. And thank you so much for having me during your prestigious event, and congratulations for reaching this goal. So we will be following you quite closely. I think As Tom said, there are many organizations in the world that are providing financial services with an impact or social focus. Triodos Investment Management is a part of Triodos Group, and Triodos Group is one of the oldest impact investors in Europe. We've been investing in positive impact for around 40 years now. Triodos Investment Management invests in organizations such as yours, in financial institutions in about 42 countries in the world. I personally manage and co-manage what we call financial inclusion funds. So our focus is on those organizations that are creating positive impact through financial institutions and financial means. That's in a nutshell what Triodos Investment Management is and how that builds up the Triodos Group.
Justina, can you tell us about assets under management or some number like that? Is that a shareable number for the Triodos Group?
It's a shareable number. We're very transparent. You can find our numbers and our information on the Triodos website. Triodos Investment Management manages assets under management of about 6 billion euros. And the financial inclusion funds that I'm co-managing manage around about 1 billion in investments in financial inclusion entities. And as I said, those funds are active in about 42 countries, as well as in Africa, also in Sri Lanka. And really, the main question we continue asking ourselves is, what is impact? What is needed? Why do we invest in certain organizations? And for financial institutions, the question is, what should a financial institution actually be doing? What is the role of a financial institution? And Tom just referred to the financial crisis of 2007, 2008. And I think that was a pivotal moment for quite a lot of players in the financial sector to rethink their role and to redefine what they are there for, basically to be service providers to a large population of those that are either underserved or unserved. We get the question very often about, how do you define impact investing or conscious capital? There are many definitions, but there is one that is quite commonly used, and that's a definition that was coined by what we call the Global Impact Investment Network. And that basically says it's impact investing or conscious capital is when you're intentionally investing in positive impact. And the main issue here is the intention, that you are able to intentionally show that you're making this investment because you believe in the impact that will be created by this financial institution. And of course, the impact needs to be measurable. It has to be positive, because impact can also be negative when you're investing. I think I'll leave it at that for now, and come back to it to this discussion a bit later, perhaps.
Sure, and I have a follow-up question to the two of you, Tom and Justina. 6 billion euros, that's a significant amount of money. I think, Darshan, our stock market is certainly not bigger than that. It's smaller, right? And 1 billion euros deployed around impact, right? Is this a serious investment, or how does a portfolio, how do the owners of this money, they could be pension funds? I'm not entirely sure where your money comes from. Are they pension funds? Are they savings of some other sort? Do some of that come from the government? I'm not entirely sure. But what's the remit that the owners of this money would normally give fund managers such as yourselves around impact investing? Do they look at a double bottom line? How do you report to them? How do you be accountable for those outcomes? Maybe Tom, you can start, and Justina take over.
I think I'll let Justina start, and then I'll follow. So,
go ahead.
Yeah.
Well, our investors are conscious impact investors.
Sure.
They are making these investments in the funds consciously, expecting a mix of impact, risk, and return to be managed. Our investors are long-term investors. They're looking at long-term return, both on the financial as well as on the impact side. Our investors are conscious of the global issues that we need to address. And that is a challenge for a fund manager, because you will need to structure funds in such a way that they address these global issues. So next to financial inclusion funds that I mentioned, we also have funds that are addressing climate change, and funds that are addressing food security, and funds that are addressing other global challenges. So it's a variety of investors coming from the private sector. We do not have government money. And they require from us that we provide to them an elaborate account of how we are creating impact, and provide them with a decent return. And especially the investments in financial institutions, whether they are listed or private financial institutions, require a very elaborate account of how these are creating impact, because the layers in which you create impact are to the end beneficiary of the financial institution. It's not necessarily the financial institution itself, but it's the end beneficiary of the financial institution that is being impacted or should be impacted by that money. So it's as challenging as interesting to be an agent of change for that chain of investments. And I'll leave it to Tom, I think, to say something about the bigger movement of.
And also, I have a question for you, Tom, as you sort of comment on that. What are benchmark returns like? Are investors willing to take a slightly lower than benchmark return on an impact investment? Are they able to tolerate a higher risk than that normally you would tolerate on your regular portfolio? How do you balance this out, or how do you explain this story to a potential investor?
Well, I think one of the things that that this group of banks has realized over the years, that the trade-off is not necessarily as big as it's portrayed. In other words, the returns that we're showing on our banks are actually higher than the returns on mainstream banks. Right. And there's no expectation in many of the institutions that we're working with. If you look at Southern Bancorp in the U.S. or Van City in Canada, working with their members, their returns are quite remarkable, and they're returns of several different types, right? So there is the return on investment that you make. There's also the return on societal benefit. Again, in the case of a number of banks working with indigenous communities, you see remarkable transitions that are underway. I think the pandemic was especially important in the last period of time to highlight what banks like Sarvodaya Development Finance can do, because I like to always quote Harari, because he's a known historian. He said the decisions people make in the next few weeks and years are probably going to shape the world in years to come. And what you have seen in the financial sector in the time of the pandemic, when we looked at the values-based banks that we've worked with, there were several things that were distinctive. They were able to recognize and act on the real opportunities to accelerate digital technologies to continue to support their clients. That is real and had a direct effect on being able to stay in contact with clients. They were, on average, higher than other mainstream banks able to participate in government schemes. And so the ability to be able to connect with government, because they were serving the bottom of the pyramid, supported their mission. And lastly, one of the things that we saw was that they were resilient in terms of profitability, asset quality, and in their non-performing loans, they weren't seeing greater risks. And so I think all of these things add up to a an ongoing reconfirmation of the kinds of banks that Sarvodaya Development Finance is stepping into, if I put it in that way.
Yeah. And maybe just, sorry.
Yeah, go ahead.
I got on a thought while Tom was speaking, just maybe to go back to that concept of trade-off, because I think that's discussed very often, and we get that question as investors quite often. So if you are investing in these kind of financial institutions, are you accepting a lower return? How do you explain that to your investors? And it's very concretely different. And I think what people or some groups of investors or players in the financial market don't understand is that impact investment is not very far from effective risk management. Because of selecting financial institutions that are focused on long-term returns, that are focused on impact, positive impact, you're in that way also deselecting those financial institutions that are short-term focused, that are running excessive risks, and sometimes also having a business model that
I think there was a freeze there.
Yeah, Justine's freestyle. I mean, this question is coming in, and
Shaminda, just to chip in here with regard to the return perspective of some of these impact funds.
Sure.
So there have been enough and more of research, and then actual research shows Global Impact Investing Network evaluating some of these about 71 private equity impact funds since 1998 had revealed that the return is about 6% in US dollar terms. And then if you look at Wharton School Impact Initiative also had carried out a research of about 32 private equity funds and had come out with about almost more than a little over a 9% IRR on US terms. And also on another case, the McKinsey on impact investing had come out with a research where they had shown IRRs of about over 9%. So I think it's reasonable, though there are certain challenges, the risk might be higher, but I think in the medium to long term, investors can actually make decent returns in line with the market returns.
Exactly.
Okay, excellent. Channa, may I bring you in here at this point, Channa? I mean, we've discussed from a global perspective what impact investors, what mindset impact investors have when they enter, bottom of the pyramid lenders like yourselves, and generally impact investment in general, right? The story is that, the returns between impact and non-impact investment isn't so large. And in fact, like Justina mentioned, there may be other sorts of upsides to impact investing, not limited to managing excessive risk-taking. That culture of, that culture that we saw was far more widespread than we had ever imagined during the global financial crisis. We saw that. What's your philosophy as chairman of the board? What's your philosophy for the balance between impact and shareholder returns?
Yes, I think in my view, both can be achieved. And I think it is also a moment that organizations must be very creative because bottom of the pyramid has been in the bottom of the pyramid for a long time. So I think it entails now a moment that we need to think differently out of the box and find solutions to this in a way which is not typical. So in that mindset, we also really looked inwards in our organization, and now actually we have put our initial steps to try and link the entrepreneurs to the market. So in Sri Lankan context, we were inspired that Daras, organizations like Daras, which do internet marketing, these are internet consumable goods being delivered. So they do 15,000 transactions for a day, and similar to, this is a local Amazon sort of setup. So what we are determined to do is where these local entrepreneurs, we want to first uplift their capabilities, immediately link them to the village societies. The village society will endorse that this product comes from the village and its authenticity will be ensured. And then that product to the village transportation will get into the first mile delivery and thereafter come to the Sarvodaya district officers. From the Sarvodaya district officers, it will come to the consumer. So we are very committed to link the entrepreneur to the market. It's a B2C relationship that we want to develop. And I think with this, it can even open up international markets for these entrepreneurs. So it is very important that we create the marketplace for them in addition to financially supporting them. And given the track record around the world, I mean, organizations are doing real time. Some of the software is getting developed in Sri Lanka for these international organizations. So I think currently we are talking with a few preliminary architectures have been done. So our next big move is to put this platform and link the entrepreneurs to the market in a big scale. And that will really propel, we hope it will propel the entrepreneurs to a different league. And that will be one of the important things that we will undertake post-IPO.
So just to make sure I understood you right, Chan, I mean, Nilantha and yourself, you mentioned the network effect that SDF has due to it being linked to the Sarvodaya movement, 5,400 village societies. And then you have Sarvodaya Development Finance. And now you're talking about taking that network effect to a greater level, or sort of amplifying that by deploying technology. So you're essentially deploying technology around access to finance, but really to these 5,400 village level societies. Are those your main customers?
Yes, so actually no. So the customers, Shamindra, the entrepreneurs will evolve around the society. So society will say is typically centered in a village, and that village can have 10 entrepreneurs. Right. So the society also, we want to transform it to become an agent. So the society is virtually an agency model. So it can sell, for example, bicycles, motorbikes, gas. It can be utility bill payments, which we have started already. So we have about 200,000 customers paying utility bills at the Sarvodaya Society. Whether it is mobile, electricity, water, all utility bills being paid. And so we want to escalate this. So the society will get strengthened because society will also become a revenue making model. And so society will thereafter look after, there are the Sarvodaya preschools. We have over 1,200 Sarvodaya preschools which are run across the country. Then it has the women's group, it has the mothers group, it has the youth group. So they can spend some of the money on the development of those groups around the village. So it is going to be a powerful conduit. The society will also generate income. And of course, the pivot of this is the entrepreneur who will develop his product and get the endorsement of Sarvodaya Society. And through that, we will put him to the this village app that we are developing. It's a village business app which we are developing.
Let me bring you in, Nilantha, and I think there's a couple of questions that potentially can be directed to you and are relevant to you, right? Akila Pereira is asking, I noticed from your IM information memorandum that the NPLs are lower than the industry. How is this possible given the type of clients you target? Nilantha, we can't hear you. I think you're on mute.
Still.
Yeah, Nilantha, I'll hang on. I'll post this question to. Okay, now I can hear you. Yeah, go ahead. Okay, how is your lower NPL possible given that you're targeting the clients that you are targeting, which is bottom of the pyramid?
Right. So, Shamindra, can you hear me now?
I can hear you now. Please. Yes, go ahead.
Right. Okay. So at the inception, I was talking about our portfolio, which is coming from outside Western Province. And during this pandemic also, as all of we know here in Sri Lanka. So the economic activities of the rural economy has not been stopped by this pandemic, because most of them were very much active by providing them providing their economic activities, such as providing vegetables, fruits, and other eatables to the main service-oriented economic centers. And as a result, of course, their income level has been improved. And recently, what we have seen is even these farmers or the related activities which is around these economic centers, they are getting fairly good return on their, or the better price, like when we compare 2 years back. So as a result, of course, they are rich with their financials and the cash flow. So they start making payment, and of course, even the government helped them to be more proactive, productive and proactive. And as a result, of course, they start making their payment. At the same time, I must stress the point that the branch network and their initiatives in order to help these customers, and actually most of these customers are they are involving in income generating activities. So we have not given 95% of our loan is to income generating activities. So most of these small timers, they were doing their activities. And the something that I want to highlight over here is Sarvodaya is always developing and encouraging this alternate economic model. So they and Sarvodaya main movement have encouraged them to look at what are the opportunities stemming from this pandemic also. As a result, they start making a lot of the payment, and the large large level of borrowers who have found difficulties in making payment due to this government initiative in order to bring down the interest rate to single digit, have seen that they can repay those loans, and the bigger loan amount that we had, or maybe the defaulted one, of course, moved away from our organization to banks, where they got some other benefit from them also. And why they were able to do that? Of course, we have encouraged them to look at alternative economy model, where they can generate alternate the income generating activities. So these are the main three areas that has helped us to bring down our NPL.
There's a question here, and I'll just post that to you. What percentage of your loan book is currently under moratorium? Just to give some context, due to the impact of the pandemic, banks and non-bank financial institutions were requested to extend moratoriums on capital payments, and sometimes
it's around 40%. And actually, when government or the CBSL was extending this moratorium, one message that we were clearly giving them, given to our customers, is don't take this moratorium as a rent seeking instrument. This is what we have highlighted. And as a result, they got the first moratorium. And when we looked at, and when we encouraged them to not to look at that as a rent seeking instrument, what they did was they start looking at again the money or the value of the money, time value of the money, and calculate. And our branch managers were helpful them to look at those areas. And so when CBSL extending the second moratorium, of course, the borrowers didn't like to go with those moratorium, because there was another element attached to it. When they want to postpone the repayment, of course, there was another interest component that they had to bear. So all those, and we of course helped them by providing ODI waivers and kind of thing. So that is, now it is very much under control.
Just very quickly, Nilantha, what is NPL like, and how is it? Is there a geographic spread of NPL? Is it equally spread? Is it in certain areas?
So in SDF, or Sarvodaya Development Finance Company, we have been able to maintain our NPL at single digit. So it's 9.98 is the NPL ratio. And one thing I want to highlight is this economic activities or the NPL level of this agro-based leasing portfolio is around 0.4%, which is a fairly big achievement in our company.
Okay. Darshan, can you talk to us about the valuation of the company? You know, in terms of net assets per share, in terms of PE, you know, how did you, as the investment bankers to the issue, how did you sort of compare and contrast those numbers to the NBFI sector or even the financial sector in general?
Yeah, so let me actually highlight some of the financial performance of the company. So since 2018, actually they have been making good profits. 2018 they reported about 97 million, and then by 2021 they reported about 183 million. So SDF has been quite profitable, and probably, of course, compared to some of the other NBFIs in the market, they have been quite profitable. And also, if you look at the disbursements, they have been actually recording decent disbursements. And in fact, we had forecasted, or we had estimated about 300-400 million rupees per month. But apparently around July actually dispersed about 700 million. That was a historical number for SDF. But actually, come October, they actually exceeded that also and recorded about 800 million disbursement. So probably someone can argue that there was some pent-up demand. Yes, true, that would have been the case as well. But we expect the company to sort of do better than what we have estimated. So of course, we have taken as investment bankers, when we do valuations, we take some conservative approach. But we are of the view that the company will with the 200 million mark that they had that we had estimated for this financial year. And then looking at the growth prospects, so they have as a base of about 9 billion now, expected to record about go up to about 20 billion by 2025, and then about 35 say around 2028. So you'll see that there is a tremendous growth, and which we believe with the capital raising and the capital being in place, they'll be able to aggressively improve on their deposit base, and of course bank borrowings and other debt instruments, so that they'll be able to perform and record these growth maintain these growth levels. So the gross loans, net loans, all deposits are expected to record CAGR of about 20-25% over the next 6 years or so. So looking at those growth prospects and the current performance of the company, if you look at the valuations, yes, we are actually valuing the company at about PBV of about around one time. So if you look at the private placement that I was talking about earlier, at that point we valued the valuation came around to about 1.24 times. So now around this time around, we actually are valuing the company around 1 time book value. So if you look at the sector that SDF falls into, that is the diversified financial sector as per its classification of the Colombo Stock Exchange. You'll see that the multiples, PBV multiples is around 1.9 or 1.9 times. So, and which means our valuation for SDF is about 47% discount to that. And of course, because early October, mind you, come November, it has gone through the roof. The multiples are well over 2 times. So even so even if you sort of consider that way, SDF has been attractively valued. And also, we didn't want to actually to be on the conservative side. We didn't go by purely by the diversified financial sector multiples. So what we did was we identified a set of peers, about 16 of them, based on the asset size. So we actually picked up a peer group of less than 35 billion, and then we looked at the multiples. So there again we saw the PBV multiples to be around 1.22 times. So there again it's about 16% discount still for the valuation that for SDF. And also it's interesting to see. Actually, we did an analysis where we looked at the average PBV of the growing NBFI sector. So when I say growing NBFI sector, we looked at the NBFI is less than 20 billion. So if you look at, if we had analyzed, we actually analyzed over last 10 years, 10-year average, that itself amounts about 1.4 times. So growing NBFI, so that's where SDF is. So which means there's a high potential for SDF to grow at those levels. So which means we are of course convinced that it's attractive price. And even if you look at the diversified sector PERs compared to SDF, attractive price.
Right. Chana, can I bring you in here, right? I mean, Darshan mentioned that you've had, over the last couple of months, last few months, strong loan growth. Did this growth surprise you? Where did it come from? Do you anticipate this to be pent-up demand? How do you analyze this?
Yes, Shamindra, interestingly, I must also say the entire organization is driven by a colloquial saying, it is a Sri Lankan village saying called Amma Gamma Rudava. So that is the vision, that is the mission, that is how we are driven. So the three words Amma Gamma Rudava, when translated, I think it says it talks about the desire to succeed and the relentless pursuit to succeed, right? So it is you're driven to really succeed, and there's a huge desire and a relentless pursuit to achieve what you have desired. So this is the motto which is driving our entire team. And whether it is, we apply this at the level of recruitment, at the level of operations, at the level of serving the client. How passionate are you? How engaged are you? How hungry are you to do something? So this ethos is driving the organization very strongly forward. And so we have, this has done very well. Also, we have our incentive structures to staff has been also done broadly. We made sure that they are well looked after. And we also, in IT terms, about 80% of our workforce is computerized. And we are computerizing at the society level also. As I said, the utility bills also can be paid at the society levels online. So total digitalization is also happening in the organization. And our dashboards where we monitor these employees, we have at least 20 to 25 dashboards which operate in real time, where we really measure each and everyone's performance. So everyone, so I think a combination of passionately working hard, working smart, and working with a purpose is driving this organization forward. And to be honest, I'm not surprised at all. And we will double these numbers a year from now. And as IPO takes place, I think it'll be a huge turning point, because I think we will elevate the organization to a different level. And doubling our portfolio is reasonably simple, because we have put the infrastructure. We have a staff of almost 500 employees, 480 staff members to be precise. So we have put the infrastructure which is able to deliver twice of what we are currently doing in terms of disbursement. And that is without any problem. Without too much of an effort, we can double our portfolio, and we are determined to do that in the coming months, Shamindra.
Okay, thanks for that, Chana. And there's a few questions here that potentially are worth taking on. A few from Shamil Piris. What are the current NPLs? We've answered that, I think. We've also discussed net asset values and PEs on your valuation. Here's one. As a listed entity, will not cause will it not cause substantial pressure on your current theme, as you will be answerable to provide fair returns to your shareholders? So this is about that balance between impact versus shareholder returns. How do you address that post IPO? Currently, it's at least you don't have public shareholders, although you have done a private placement and you do have shareholders. Can you address that, Chan?
Yes. So Sarvodaya also has, they deployed about ₹1 billion this year for their social engagement to empower villagers, and their dividends is an important aspect of this. So they are seeking at least a 40% dividend payout ratio to come out of SDF. So it is important for them that SDF is also doing extremely well. And there will be a balancing act of some sort which we will have to perform, but we are very confident that we are able to do that while being extremely reasonable to people. I think people, the other aspect, Shamindra, is the brand name of Sarvodaya. Every time we pay a dividend, that money will come, 100% of that money will come straight into the village. So it will reinforce the Sarvodaya brand every day of the year. It will reinforce the Sarvodaya brand. So it will support our development further. So I think Sarvodaya accepts this, so we by nature, by this organization, will be very reasonable. And when people understand that this organization is reasonable, and if we are able to communicate it very well to the people, I think we have a formula that will denote success, by definition. So I remain, and my team remains very confident of delivering all the expectations.
You said a 40% dividend payout ratio. What sort of a yield does that work out to? Has anybody done that number?
So dividend yield would be north of 10%. I will also touch on one or two things that I think you all touched earlier. One is the P ratio. So we have delivered a PE of 11 times, closing 31st March this year. The valuation is on that. So we are about 30% discount on the PE also when you compare with the sector PE. There was, Shamindra, a quick question on NPLs. We are single-digit NPL, and more than half of that is already provided. I think 60% of that NPL is already provided. And most of that NPL comes from a historical background, from a very deep history. It came when Sarvodaya, this organization, was on a charitable footing, in the sense that, breaking even was good, and the ethos was actually making money. But last 3-4 years, we've changed the nature of what we operate, and we've been getting ready for IPO and for public investors to come. So we're very mindful our expectations of investors, and we're very confident to deliver.
Okay.
Yeah. So I mean, just to stress on what Channa said regarding Sarvodaya movement. In fact, through the private placement, there were about 1,200 Sarvodaya societies who actually participated and became shareholders of SDF. So as he said, it's very important and to pay them a dividend and see that the societies in turn are in a position to get this money and use it for their activity. So just to stress on that, there are 1,200 societies as shareholders as of now also. So, and also they are through the IPO, we understand they are looking at further sort of participating. So that's important to maintain a good dividend payout.
Not that dividend payouts are comparable across borders, Tom and Justina, but I mean, when you look at, I don't know if you have access to research or evidence about the sort of departure between impact investments and those run as purely aiming for shareholder return maximization. What sort of a difference purely on financial numbers, purely on market valuations have you observed?
You want to go, Kun?
Go ahead, Justin.
Justine, I'll follow.
Oh, you want me to respond?
Sure. Sure.
I think, of course, you can't generalize between these type of financial institutions, but the network of banks that Tom was talking about, the Global Alliance for Banking on Values, does a research on an annual basis where there is a sort of comparison made between return on equities, for example, of mainstream banks and those of values-based banks. And mainstream, in this case, I mean commercial, non-impact focused financial institutions of a similar scale. And what we've seen, it's not that there are significant differences between these type of returns, but there is a very clear benefit to having stable long-term returns that is offered by sustainable, values-based, ethical, focused, conscious, capital-driven financial institutions. So I would not say that mainstream banks create better financial returns or impact-focused financial institutions create better financial returns, but you are creating a better, stable, long-term return next to the fact that you are also addressing societal problems. That's what comes out of that research on the whole.
Thanks, Justine. Maybe just 1 minute to add to that. I think what I said earlier, that if the reason why you don't see it as a trade-off in terms of financial returns is because there are social returns and there's return on natural capital in these banks, and that's already been expressed, I think, by Tiana, is that in many ways it's the social returns also that give you the network effects. Let me give you an example. Bruck Bank, in its agent structure, similar to what I just have been hearing today, when they initiated the bKash mobile phone system in Bangladesh, 0 to 14 million in 4 months. So 14 million users. Now, why? What? And again, Bangladesh arguably is a very large country, but let's say 10% of the population suddenly were using mobile phones for their banking transactions. But it wasn't because it was not only because it was more convenient, but because it was an intention of the bank to reinforce the relationships with the agents in the field, and to get a much clearer understanding of the financial state of those businesses that they were giving loans to and investing in, and this has jumped them from number 8 in the Bangladesh banking system to number 2 in the Bangladesh banking system, simply by leveraging those network effects, by reinforcing their relationships on the ground. And I think this is happening in a number of the banks. Just a funny one, Van City in Canada, they initiate something called cash mobs, where they helped to focus on going to companies that they were investing in their member population. And so they got this reinforcing effect that suddenly people were going to work with the merchants. And that's what we're seeing in the B Corp movement as well, in the beneficial corporations. They start to transact and interact with each other because they know that they're on the same mission, going for social gains, and it's an intrinsic motivation.
Tom, since you are speaking, when you look at institutional money or high net worth individuals that may be considering, in a Sri Lankan context, about potentially deploying some of their capital towards impact, do they need to have a slightly different mindset in any way? Do they need to be more tolerant of risks and volatility that they weren't previously? And maybe there are trade-offs. Is a different mindset important? What's your experience around this?
It's a good question. I again, as well, I say that there aren't trade-offs. Certainly, any financial investment has volatility that goes with it, and that has to do with also just the sovereign risks of the country you're in. But I think in general, what I've seen across the landscape, and this goes from Japan to the Pacific, and through Europe and Africa is that there is a mindset that is an intrinsic motivation to want to invest in those entities that not only are going to give you a financial return and a long-term stable return, but are going to help you on the level of being able to see that you are doing something at the same time that is supporting your society, supporting the development of human beings. And again, that's a very hard thing to explain, but let me put it in very simple terms. If you think as an investor like this, you want to think when you go to sleep at night and you put your wallet at your desk table, at your side table, and you go to sleep, and the money flies out of your wallet around Sri Lanka. Where do you want it to land? Where do you want it to do the best good? And I think that's a little bit of the spirit that comes with these kinds of investments. Although again, I want to really reinforce that you want to look carefully, but you want to look medium and long term.
Yeah, I would support that. And as an investor, we continuously say, don't get blinded by the numbers. They're very important, and you should, of course, have a baseline. But management and their intention is far more important. It guarantees whether there will be mission drift. It guarantees whether they will stick to the purpose and mission. So that's the experience we have investing in Africa, Latin America, in Sri Lanka as well, and other Asian countries.
Justina, I know you have to soon depart to attend a very crucial meeting, and we are very grateful that you took the time off at such short notice to join us today. Can I ask you about your risk perception of Sri Lanka as a fund, in a macro sense? Can you, Sri Lanka's faced a tough time due to COVID and also due to its deteriorating macroeconomic situation. As a fund, how do you see Sri Lanka and investments in individual companies right now?
Yeah, good question. We invest in quite a couple of Asian countries, including Sri Lanka, and quite a lot of investments in India and some in Nepal. We look at more from a regional perspective as to whether there are macroeconomic activities taking place that we should be taking into account when investing. At the moment, of course, the biggest impact that has been in the region, but everywhere in the world, is the COVID pandemic and how countries are addressing the pandemic. I don't exactly know the exact numbers as to the potential of the local governments to help in moratorium, addressing moratorium issues and addressing, let's say, social issues that appear because of lockdowns that have taken place in the past. I know that the economy is open now, and you are doing business as usual. But our risk management has been heightened since 2020 because of COVID, and we are not only looking at the individual companies themselves. We are also looking at what the governments and what the local entities are able to do to keep businesses operational during the crisis. I understood that you still have 40% of your portfolio in moratorium. That is generally for investors an interesting one to deep dive into and have an understanding of whether that or what the runway of getting out of moratorium with those clients is. That does not apply specifically to this company, but to all companies that are getting out of the COVID crisis.
Sure.
Long answer to a short question.
No problem. No problem there. There's a couple of questions I'd like to take for the panel, and potentially Channa or Nilantha can weigh in on these. Is there any guidance or expectation about any of the existing shareholders who would or could exit once the IPO comes to market? We don't know at what price it'll immediately come. Some companies have doubled in price. Channa, anything you can say?
Yes, I can tell for sure Sarvodaya is committed virtually forever. Post IPO, they will have north of 54% share ownership. Then our societies are very committed, so they will also have a reasonable stake. About, I guess, about 20% is the society will hold. Then we have a Japanese impact investor. He also has been with us for over 5 years. So he's also there. So I think, we have a committed set of investors. So we're offering a 30% ownership this time for ₹1 billion. That was mentioned earlier. Out of that, we have already got commitments for at least half of that by investors who are long-term thinking investors. I think, I look forward to a long-term engagement with future shareholders, Shamindra.
Okay.
Shamindra, just to add there here, actually, just to answer that question. As I mentioned earlier, there was a private placement in February this year. So as per the SEC stock exchange rules, there is a lock-in period automatically on some of those shares. So the shares will get locked actually 12 months from the date of investment or 6 months from the date of listing. So as a result, there is a natural lock-in coming in for some of the shareholders who came through the private placement. And of course, as Chana said, there is a commitment and a commitment from Sarvoday's side to Sarvodaya movement to be there as a long-term investor. And then there is a Genting consultancy group out of Japan, who also has actually mentioned or rather indicated their intention to be with the company on a long-term basis. So with the 30% that's coming to the market through the IPO and whatever the existing public float, the company will have about 40 to 45% public float once it is listed, with no major shareholder intending to exit as a result of automatic locking.
Got it. Justina, we are very grateful for you for taking the time out at such short notice. You really enriched this gathering. We realized from early on that you had to leave us for another meeting for which you have flown all the way to the UK, I think. So thank you very much. We will let you go at this point.
Thank you very much, and congratulations again with the stage you're in at the moment. Thank you.
Thank you. Thank you very much, Justina.
Right. I was about to ask Channa about predatory lending in the industry, and this is something you slightly touched on at the beginning of the conversation, Channa. Can you let me know, what's the philosophy on this? Predatory lending is something we've seen and heard about in the non-bank financial sector in the past. How does Sarvodaya, when you are a relatively small company, substantially or in a meaningful way counter this sort of challenge?
Yes, Shamindra, this is a very important question. Thank you for asking. Sri Lankan economy, 40% of the borrowers, they go to broadly, they go to these draconian money lenders, the loan sharks, and they charge in excess of 10% per month. You find people charging as high as sometimes 20% a month. The issue is they immediately provide money. That's one aspect of that. Mm-hmm. And the second aspect is that people are really not aware of how much of interest they're paying for these people. And sometimes they pledge their title deeds. You cannot get it. Valuable land goes to these people. We've seen time and again, we've rescued many such people who have gone to such draconian money lenders. And 40%, and this is very present even in the Colombo, in the heart of the city, it's happening. 1 kilometer from the prime ministers and presidents' offices, these are happening in the markets around those places even. So still there's 40% going to them, and others are charging, as I said, the other finance companies are charging into microfinance effectively north of 40% per year. And as I said, we are about half of that. We charge half of that. And with credit lines coming in, we are very determined to bring that also down drastically. You know, I remain very hopeful, Shamindra. One is literacy. You know, financial literacy is one aspect of this, really educating these people. And secondly, of course, providing them quick access, because even our loans, we try to disperse to them within a few days. And some products we disperse immediately. We disperse the funding, because when they require funding, what happens is in the banking sector, it can take anywhere around 3 months for them to 3 to 6 months for them in the banking sector for them to get a loan, and that is not feasible for them. So there's a big role that we can engage in, and one aspect of that, of course, is financial literacy, really telling customers that you know, this is what you have to be careful, and you need to carefully you know, understand the gravity of some of these numbers that you're undertaking to repay.
Okay. Nilantha, can I bring you in here? And there was a question here about how you're going to deploy money. And this is something the Chairman Chanadis also touched upon early on in the webinar. Apparently, I have not read this myself, but there is a analyst report from First Capital that recommends that people subscribe to the IPO, and it addresses this, or it highlights how you plan to deploy technology. You know, how long do you think this will take? What are the practical, likely practical or tangible benefits do you think you will see in the first few rounds of deploying this product? And then potentially, you know, what portion of your IPO funding will go to this? Is it a significant portion at all?
Right. Now, by end of this financial year, or maybe end of March 31st, industry experience negative growth in asset. And now in SDF at our finance company, we of course had double-digit growth. So this came through these societies and the branch network of 51. And just to answer your question, we have clearly outlined our roadmap in order to make this effectively. And as our chairman mentioned, we are going to make our book sizable within a very short-term period. Mm-hmm. So this digitalization process, of course, according to the roadmap, and some actually we are running the current or the pilot project with 75 societies, which has given now this is a mark like per day during this pandemic period. One day they have recorded 37,000 transactions within 75 societies. So since we are currently running this pilot project, and it will take maximum of 9 to 6 months in order to deploy this. What we have envisaged in the Smart Village app, that we are going to connect 5,400 societies and the branch network.
All right. While we discuss this, I also had the pleasure of having a conversation with Dr. Vinya Ariratna this morning. It was a brief conversation, but there were several things that are potentially relevant which he discussed from then. Let me quickly play that.
Empowering a community, empowering a village means that the people themselves are part of the decision-making process to start with. Unless they feel that they are in control, I don't think they can fulfill their basic needs and really stand on their feet. So what Sarvodaya had been doing is to create that capacity in the community in the form of a community-based organization called the Sarvodaya Sramadana Society. So they were working on social development, economic development, and also political development that is really having democratic governance in their own community. So by having such a structure, people are then equipped. Also, we provide them with the necessary technical knowledge, the assistance, and also networking and channeling financial services as well, So that will definitely empower in a very sustainable way in a community. Taken all together, probably we have done work reaching more than probably 2 to 3 million people with a monetary value of over 5 billion rupees. Credit is an integral and important part of economic empowerment. There's no question about it, because people have been so disempowered and their resources have depleted. So you need a transfer of financial resources to the community in the form, it can be in the form of a grant, it can be in the form of a loan. So initially in very impoverished communities, you can't start with a loan scheme, but you start with a grant. But then to really make their economic status more sustainable, you need capital to start enterprises, you need capital to get people together in thinking of possible sustainable businesses in their community. So credit, including microcredit, plays an important role, and it has to be provided in a systematic way, not to create indebtedness in the village, but as a tool to empower, and then they are able to also look at the resources that they already have, so that cash loans can leverage the other resources, their creativity, their innovative capabilities. So all that to be brought together. So microcredit and credit plays an important role and will stay as part of the larger economic empowerment strategy of Sarvodaya.
This conversation for now a little over 1.5 hours, and as we are sort of wrapping up, I would like to come to each of you to sort of get your final thoughts. It can be to sort of wrap up what you've contributed to this conversation. It could be to add a new idea or two. May I start with you, Darshan? How would you like to sort of approach this and wrap up the conversation?
Yes, Shamindra. So if you look at the performance of Sarvodaya against the NBFI, they have done well with regard to asset growth, the NPL levels, the NIMs. So they are actually recording more than average, above average NIMs, STF. And if you look at even the ROEs, they are actually in the increasing trend. And also if you look at the valuations, as I highlighted earlier, with regard to the PB multiples, PR multiples, all that is actually, we see that there is potential looking at the growth of SDF, which is effectively valued. Of course, if you look at the direct competition, looking at all those matrices, there is a lot of potential for Sarvodaya, looking at the strengths that they have with the Sarvodaya movement, the ability to grow the book quite fast. So we believe, so it's not just an impact investment. It's actually there is a return to be got from this as well. And so the IPO is opening on the 23rd of November, as I mentioned earlier. Applications people can apply now. So look forward for the support of the investors, and hope you'll be able to invest and get good returns from the Sarvodaya impact story.
Let me come to you, Tom. Any final thoughts as you wrap up?
Maybe I just want to reiterate that when you think of return on capital in this investment, that there are different forms of capital to pay attention to. I think also committing to short-term and long-term returns is an important consideration for someone investing. And maybe I'll just add, Justina probably didn't want to say it while she was live on this session. Triodos just invested in a bank in Serbia, and one of the consequences of that investment was a 40% increase in new loans, and so there was the possibility, by having new capital, to basically do new things that created a reinforcing loop. And I think, and then lastly, I'll say, I think you've got to think about your own intrinsic motivation as an investor alongside of your pocketbook, and I think that combination will help to make good decisions about how you invest in conscious capital. Thanks.
Tom, and may I come to you, Nilantha, next? Any final thoughts?
Yes, and we as a company, of course, we know we have to have this customer-centric approach in order to fulfill the the stakeholders or the mainly the shareholders' aspiration or their benefit. So we are totally committed to give better returns to them. And since this is a webinar which is mainly focused on the investors, of course, I would like to make a note here at this webinar. Of course, we are determined to give a better return to their investment while focusing on our main objective of the organization and while empowering Sri Lankan business community and the entrepreneurs. Thank you for joining us.
Thanks, Nilantha. And to you, Chanda, any final thoughts as we close?
Thank you, Shamindra. So I will touch on a few aspects, and first of that would be the Sarvodaya brand name. I think this is a unique moment, and I cannot see a second brand name of this type in the villages being present, because Sarvodaya has worked so hard, relentlessly for 60 years in the village communities, and probably they've touched the lives dearly of at least 2 to 3 million people. The water sanitation projects that they have done, preschools, women empowerment, the list, they work in about 15 to 16 sectors they work, and that is over the last 60 years. And this year, as I said, they put ₹1 billion for social empowerment in the villages. Last 10 years, they have put about 6 to 7 billion. They have invested donor funding and all funding together in the development space. So they really touched the Sri Lankan village communities very strongly and dearly. And we are on the back of benefiting out of that. So STF, we are close to about 450,000 clients. We are closely related to them. We transact with them very closely. 57% women. Working with 5,300 village societies is an unparalleled, compelling story that we are engaged to grow from here. From our side, we have a very committed, dedicated team. Our staff is extremely committed. So we have a super team here working for this task. So I think this is a very unique moment that while doing good, you can also do well. The thesis, I think, of conscious capital, social impact capital is that, and this is a moment, I think there wouldn't be another IPO like this coming forward. So this is a very unique moment, and we invite all Sri Lankan and other international individuals, organizations to join us in this move to list at the Colombo Stock Exchange, and thereafter be in the capital market in a very engaged capital market atmosphere. This is, and we have a lovely story to tell, and also I think we have a better dreams and aspirations to fulfill in the future, and we remain very optimistic in this, Shamindra. And thank you very much for all this.
Thank you, Chanda, and thank you all for taking the time out today. It was indeed an insightful conversation. Thank you, Chanda. Thank you, Tom Cummings. Thank you for joining us. Darshana, thank you very much. And Nilantha, it was a pleasure hosting all of you here at Echelon. I wish you all the very best. Thank you, and thank you to everybody who joined us despite the little hiccup we had. And I hope this conversation added value to you about impact investing, and I hope it gave you the context about how Sarvodaya Development Finance fits into the impact investing landscape in Sri Lanka and to the Sri Lankan financial sector landscape. Thank you again, everybody, for joining us.
Thank you very much.
Thank you.
Thank you.